Aptos has been one of the strongest performers in the market over the last few weeks. So in today's show, I want to have a look at Aptos and actually dig a little bit deeper into the ecosystem, dig a little bit deeper into what Aptos actually is to get to my thesis, whether Aptos is a coin that's worth buying or whether it is overvalued and we should create a plan to short the token and long other tokens instead. So I'm going to go through my full Aptos deep dive, actually give you guys some information and insight as to what it is, how the ecosystem is developing, and then at the end of the show, I'm going to give you my full Aptos plan for longing, shorting, exactly how I'm going to play the Aptos trade, because it is one of the new 𝗷1s in the market, and we know historically new 𝗷1s tend to perform very well, and there is opportunities to trade them, whether that be through the ecosystem, longing the token, or even sometimes shorting the token to make money. But I think most of us have made money on Aptos if you have been watching the shows, because back 3 months ago, I did a video where I said I'm buying GNS and I'm buying Aptos. And since that video, GNS has pumped over, I think, 3 to 4x, because it was about $1.40 when I made this video. And Aptos was roughly $6 to $7 at the time. And that ended up being a massive winner because it's now $17. So it's up roughly 2.5x. We did buy on the day that it went down 47%. So we've been in for a while. So I think a lot of us are in a very good position when it comes to Aptos. I have been taking some profits on my Aptos spot trades. But for the ones that aren't in or didn't get into that trade, I will be giving you guys my full rundown and plan at the end of the show after we go through all the fundamentals. So let's get straight into it and answer the first question. Why is Aptos pumping? Because every time something pumps, there is reasons behind why it happens. And this is very important to discuss because it can lead us down a thought process of cause and effect, which can help us work out how to identify these signs in the future for other tokens as well. So the first thing that I want to make very clear is that the social media hype is real at the moment. If you look at the Luna Crush data, we can see that it has been exploding in both social engagements and social mentions over the past few weeks. And as we know, social media, Twitter especially, is a major driver of price growth in crypto. Because since the market is still so retail dominant and always has been, the tokens that retail prefers, the tokens that retail talks about and gets a buzz on social media, these are often the tokens that end up pumping. And what happened was, once the price started to take off, we started to see a lot of Aptos talk on social media, and this did aid the price pump. But there's actually no fundamental reason in terms of an announcement or an underlying change to the blockchain as to why the project pumped. In my opinion, the reason why it pumped was due to its backers. It does have some very, very big backers, including the likes of FTX, Dragonfly Capital, Binance Labs was one of the private investors. Jump Capital led the Series A round, and A16 as well. Basically, every single big backer, Coinbase included, backed Aptos. And when you have a bunch of VCs in a token, it's in their best interest to pump that token's price because they want to get the best possible price when the token unlocks so they can sell on retail. And we've seen this cycle happen again and again and again for projects like Solana, for projects like AVAX that had heavy VC backing, that the VCs had a vested interest in pumping the token to get the best possible prices for themselves. So although there was no fundamental announcement which pumped the price, there was a vested interest from many VCs to actually pump the price. The third reason I think that is pumping is because people love rotating capital into new 𝗷1s. Just look at the successes last cycle. We saw Phantom really come into the fray with Solana and Matic and AVAX and Luna. And a lot of these other 𝗷1s perform really strongly because people always gravitate towards the new shiny objects in the market. People love the new 𝗷1s. They love getting onto a new narrative. And the tokens that are solving last cycle's problems, a lot of these, even if it's just the market perception of solving problems, end up performing very, very well. And I think a similar thing is happening with Aptos, and I expect a similar thing to happen with SUI when it launches and some of the other new 𝗷1s launching onto the market. And that is, they perform really well because they are new 𝗷1s, and a lot of the older 𝗷1s or the old iterations of technology are kind of forgotten, at least in the short term. Because you can't deny network effect, you can't deny community, but at least in the short term, in terms of where the market rotates capital, it loves the new projects, and they always are on the lookout for new shiny objects in the market. And I believe Aptos is one of them, and that's why it has developed such a stir on social media. The other thing is a lot of people are trying to short. I'm seeing the short game really starting to step up online because people are saying it's overvalued. And what happens in a scenario where a lot of people say it's overvalued is shorts start piling on. But the problem with this mentality is it's very easy to get wiped out. Michael Rocky Winwolf did a post saying, I got completely wiped out. I never short, decided to today, lost everything, committed to my APT short and got destroyed. Don't be one of these guys that just assumes because you think it's overvalued that you can make money on a short. That's not how it works. And as I said at the end of today's show, I'll be running through an actually good plan, in my opinion, for shorting the token if that's something you want to do. But don't just ape into shorts thinking that it's overvalued, because as we've seen in the past, tokens can keep running. Aptos can go to $20, $30, $40, $50 before it pulls back. That's entirely possible because the market is not rational. It doesn't rely off FDVs, at least in the short term. It doesn't rely on cross-market valuations, at least in the short term. It's an irrational market, especially crypto, because it's a new market, more novel market compared to some of the bigger markets in the world, like the stock market. So you are going to see irrationalities develop, and APT could be an irrationality, but it doesn't mean that you can short it. So don't be like this guy. Unfortunately, he did get wiped out. But I wouldn't be shorting a token that's heading clearly into price discovery, meaning it is still trying to find its ceiling, at least in the shorter time frame. So people keep adding fuel to the fire by shorting, and that inevitably leads to short squeezes, which is one of the reasons why it pumped so heavily. And another reason why I think it pumped so heavily is because of 𝗏𝗏𝗏. Now, 𝗏𝗏𝗏 is a South Korean exchange, and I think there was a lot of price manipulation going on with the volume on 𝗏𝗏𝗏, and this did result in some huge wicks to the upside. We could see that 𝗏𝗏𝗏 actually accounted for $900 million of daily trading volume. And if you guys know trading volumes, this is extremely, extremely, extremely high. There were some days in the bear market when not even Ethereum was doing this kind of volume. But just on one small Korean exchange, you have Aptos doing this kind of volume, and it pumped crazily. So South Korea definitely was a major driver behind the price push, in my opinion. And GCR said, Asians resuscitate crypto from near-death experiences at the tail end of bear markets, only to eventually breathe so much life into it. Westerners buy their bags years later. Just how it is, how it's always been. I didn't make the rules. If we look at the inflation token price changes over the last 30 days, so these are the tokens that are deemed to be highly inflationary, like Aptos, that don't have a lot of circulating supply currently on the market, we've seen them actually perform really well. We've seen DYDX absolutely pumped. I was very happy to call that on my Twitter, by the way, up 64% on the trade. That is still going strong. Optimism up 122%, GMT up 90%, Aptos up 335%. All these so-called tokens that were going to dump or had the narrative in the market of going to dump because they were highly inflationary, they ended up pumping harder than all the other tokens in the market. And this is because when the market kind of prices in an opinion, that starts to factor into the current valuation. And oftentimes, when everyone starts believing in one thing happening, and in this case, it was these tokens going down, the opposite tends to happen. So always counter trade the herd, always go against the herd. And when you see the herd all talking very negatively about a token, all saying that it's going to dump, and everyone starts to believe that, and that opinion becomes consensus, oftentimes the opposite thing happens. And that's why I actually opened that long on DYDX at $1.20. It's now over $2 because I saw that everyone was saying it was going to be a bearish unlock. But as we know, when the market starts to get momentum, like it has been over the past few weeks, we often see a scenario where unlocks turn out to be bullish. Whales love Aptos as well. In the last 2 weeks, orders larger than 250K on Binance have heavily skewed towards buys, so 2.8 million to 0.87. However, in the past 2 days, large trades have begun to swing towards sells. So we are seeing some whales starting to take profits, which makes sense as Aptos approaches a $16 billion FDV. Actually, today, it's even higher. It's an $18 billion FDV. To kind of compare this to a project that you guys know, obviously Coinbase, listed on the stock exchange, that has a market cap of 12 billion. But the thing to note here is that this is fully diluted, and this is diluted. So the problem with kind of taking fully diluted valuations is that the market's irrational and it doesn't really think that far ahead in the future. And since Aptos's vesting schedules over like 3, 4, 5 years, the market isn't fully valuing Aptos at its FDV right now. And whether you think that's right or wrong is another discussion. But I think it's kind of unfair to compare fully diluted to diluted market caps because it can be misleading. But just to give you an idea of what I mean, Aptos right now sits at number 28 on the market. That is still behind assets like Chainlink and Avalanche and Cardano, But if we actually look at its FDV, so we click on it on CoinGecko, look at its fully diluted valuation, so that is the total supply times the current market price, we can see it's $18 billion. And at $18 billion, that actually puts it in the top 5 of all cryptos, disregarding the stable coins. Even like Cardano is less than that, which is absolutely crazy. That's at 17 bill, and even XRP is pretty close at 40 bill. So it's kind of crazy that we're seeing Aptos actually enter the top 5 of all layer 1s in the market off the back of FDV. But as I said, you can't always go off this metric because it takes into account many variables like the time it takes to vest, and in the short term, the market is often irrational. So before I kind of get into my deep dive on the metrics and my plan for Aptos and what I think could happen with the Aptos price and how I'm planning on getting exposure long term and all that stuff, we have to go into what is Aptos, because I believe it's important to look through the fundamentals, the underlying fundamentals, to get a better understanding of where it fits into crypto, and the reason why it's starting to gain traction, at least in social terms, and have a look at some of the fundamental drivers behind that. And we're going to look through what it actually does, what the Move language offers, so that's the programming language that it uses, and some of the ways that you can get exposure after that. Before we get into all our Aptos talk, I quickly just want to touch on the gTrade contest, which is a competition that is giving away $100,000 in prizes to people that trade on Arbitrum on gTrade. You guys know on yesterday's show, we did open a long at 23K. We're currently sitting just below that level. Like, we're literally hovering on that level. We're flicking above and below our entry price. So by the end of the show, we can have a look at this again and see how it's sitting. Currently, we're down $17, which is fine. I'm trading with a $5,000 portfolio. So 17 out of 5,000, as you know, is a very small amount. And we have our stop loss set down here at 22,700. So I'm hoping for a bounce. I think in the very short-term indicators, we are seeing some bullish momentum. However, we do have the Asian market now starting to wake up, and volatility is now increasing. So we've been kind of swinging above and below this level. I'm going to maintain in the long for now. I'm pretty happy with my stop, because if I get stopped out, I only lose 12% of a $750 trade, which is like $90. So that's completely fine. But I am kind of monitoring this situation, and I'm not taking any more positions right now. I was going to take a Matic long last night, and then it went up 10%. So I missed that trade, which I'm quite bummed about, because I was literally about to do it, but I was in bed. I was like, I can't go to my computer to open the trade. I should have just done it on my phone. But yeah, this is currently swinging above and below our entry price. So let's see what happens with the trading comp, and I'll keep you guys updated every single day with my positions. But if you weren't in a trade from yesterday, I wouldn't long right now, because there's just so much volatility. It's very easy to kind of to get wrecked. So just I wouldn't be longing right now, but if you are already in a trade, I think we can keep it open. I still think the bias is to the upside. I'm okay being in a long position. I certainly wouldn't be shorting right now, but at the same time, it is kind of like a risky level to be longing today. Yesterday, actually, we did see a bounce up to 23.2. So there was one point where I was up significantly on this trade. Probably I should have taken some profits there, but I thought, nah, we'll ride it out, see if we can make a higher high. We didn't on the hourly. We came back down and tested 23 again. So let's see what happens with that one. I'm currently sitting rank 125. The first prize is going to win $20,000 on the absolute P&L side, and on the relative P&L side, where I sit 121. This is percentage-based trading, so not dollar-based trading. The winner also wins $20,000. So there's $50,000 in total prizes. Even up to number 20, you still can win something on the absolute and relative side. So let's see if I can crack the top 20 and win something. That is the goal of the trading comp. And if you guys join along with me, then you can trade using the link in the description. You simply just click here on gTrade using that link, and it will bring you straight to the exchange where you can fund your wallet and start trading. If you don't know how to fund your wallet and trade, I did a tutorial for you guys where I run through exactly how to fund your wallet. But it's just as simple as taking your money from a centralized exchange and putting it onto your decentralized wallet, like a MetaMask. All right, let's get into the Aptos discussion. So as I said, I want to talk about what Aptos actually is. So Aptos essentially was founded after the Facebook or Meta Platforms DM project was debunked. So what they were doing was Facebook was creating a new blockchain. So they were heavily investing in blockchain. In fact, I believe they invested $10 billion in blockchain, and they had all this engineering power that they were putting towards a new programming language called Move. But Facebook kind of started to pivot directions. They started to focus more on metaverse, and they decided that the investment in blockchain was just too much and didn't make sense at the time. So they decided to kind of get rid of that project and start focusing on other things. But the developers that had worked so hard on that project for so long didn't want to just let it die. So they decided to split off into two different projects called Move, using the Move programming language, but called SUI and Aptos. So the Move programming language was utilized for two new projects, with ex-Facebook developers splitting off into those two categories. So Aptos is the one that launched first, and then this year at some point we are going to get SUI, which is the next iteration of Move. They're both very similar. They both have different goals, but they are similar in their underlying teams, underlying structure, and what they're aiming to do as being kind of low latency, high throughput, next generation blockchains. So Aptos, in theory, is capable of powering up to 160,000 TPS. They came close to this on testnet. Once again, very kind of different set of conditions once you launch on mainnet to achieve these numbers, but they are impressive numbers, at least in theory. And they have $350 million of backing, so one of the most heavily backed projects from FTX, Coinbase, A16Z, Multi-Capital, and more. This was actually in July, but since then, we've seen multiple other raises as well. From Dragonfly Capital leading a strategic raise, Binance Labs also raising a strategic raise. So there was 350 mil that was actually declared, but we have seen more raises since then. And I was pretty early to this one. I talked about it in July, before the airdrop even took place. So there was an airdrop opportunity where some people made, like, I think now if you held the tokens up to $15,000, which is kind of pretty crazy. And yeah, we were pretty early to this covering it, and we did well on the trade. So I'm pretty happy with how we played Aptos, but let's get into the actual underlying technology here. Just quickly, I'll go through it to kind of give you guys some insight. So as I said, the DM project, formerly known as Libra, was abandoned in January 2022, which resulted in SUI and Aptos splitting off into their own respective projects. But born from DM was Move, a safe and reliable programming language, which is now powering those two L1s. So what Move is aiming to do is solve the flaws of Solidity and EVM. So it's designed for Meta to be memory safe, quick for dev testing, expressive, and essentially is what a lot of people are calling the future of smart contracts. So Solidity and EVM have many flaws. This is one of the major bottlenecks when it comes to developing dApps in crypto. So basically what Move is trying to do is create a much more expressive, fluid, and faster programming language that allows developers to develop apps much quicker and more efficiently than doing so on Solidity. And this also gets rid of some of the bottlenecks that using the EVM and Solidity has on creating new dApps and running new dApps. And that's basically why SUI and Aptos exist in the first place, to kind of solve the issues that Ethereum has in terms of the programming language. So if we look a little bit further into what Move can do, we can see here there is a graph of some of the differences in data storage, parallelization, transaction safety, type safety, and function calling versus Solana and also versus EVM. And some of these key differences is exactly what makes the Move programming language more efficient. Now, I've heard from some developers, and each developer will have a different opinion on this, that Move is up to 10 times more efficient than Solidity. Now, this is kind of just an arbitrary number, but just to give you, an insight into what some people are saying. Some people are saying that it is 5 to 10 times more efficient, and that is obviously one of the major compelling reasons why you would build on Move versus Solidity. So just to give you kind of an idea into the differences between the two. The main player on blockchain, obviously, is Solidity. This is what you use to build dApps on Ethereum. As one of the first blockchain languages, Solidity was designed to implement basic programming language concepts using well-known data types. However, as blockchain technology developed, it became clear that the main purpose of blockchain languages is operations with digital assets. And the main quality of such languages is security and verifiability, which is an additional layer of security. Move was designed to address both problems, representation of digital assets, and safe operations over them. Move's system ensures the integrity of this ownership metadata across executions. The result is a system where developers write ordinary Move smart contracts, but validators leverage the data model to execute and commit transactions as efficiently as possible. So efficiency here is the key. And that is one of the major drivers behind, what Aptos is and the DNA of Aptos itself. Aptos uses the block STM execution method, which is capable of powering 𝗓𝗏𝗀𝗀 TPS. Of course, there's caveats when it comes to TPS, but in theory, that's what it can do up to eventually. They said we designed and implemented highly efficient multi-threaded in-memory parallel execution engine that can execute over 160K non-trivial move transactions per second. And we can see the document here of how they actually executed this on testnet. They achieved this by bypassing the sequential execution that many other blockchains utilize. So it's a different method for how they process transactions. The tech is so exciting that one of the colleagues from Solana, Austin, who was the head of community, decided to join Aptos Labs as director of ecosystem. And apparently the network speed is so fast that the team minted millions of NFTs on testnet in an hour just for fun. So it is very clear that the tech is quite good. And Move does have some inherent advantages over Solidity. And also there are a lot of developers which have now started to develop on Aptos after their grant program launched. There was, quite a few big developers that started to join. So as of July, there were 8,000 developers in the Discord server, which had 63,000 members. That number is a lot higher now. But as I said, one of the major drivers behind it is the backers. Having all these big backers in one place definitely is not going to do any harm to your project. One of which is 𝗕𝗁𝗏 from Dragonfly Capital, is the managing partner, and he's a strategic investor. There's a few reasons why he decided to get on board and invest. He said one of the reasons was their powerful culture. So he thinks the team's awesome, and he likes the culture. He says that they have reimagined smart contracts, so their focus is unparalleled with former verification via 𝗵𝗶𝗶𝗶 and native key recovery services on chain. Developers have room to experiment safely. So safety is one of the key behind Move, which is designed from the ground up to be safe for smart contracts. So 𝗕𝗁𝗏's a fan. Obviously, he's invested, so he has a vested interest in saying that he's a fan, but he is a fan of Aptos. So let's get into some of the more nitty-gritty details. So the metrics that show if it is undervalued or overvalued right now, and then also come to our conclusion at the end as to what my plan is, now that you have a little more insight into what Aptos is. The first thing I want to draw attention to is the airdrop, which was conducted on October 19th. I know a lot of you probably didn't get this airdrop, but if you did, just sign up for testnet. Literally all you needed to do was enter your email on their testnet site. You would have received an airdrop of between, at the time, $1,000 to $7,000. But then after this recent pump, that number could be as high as $14,000 to $15,000. So the number definitely has increased if you have held your Aptos tokens. I know a lot of people did sell, which does make complete sense. So there was a big airdrop. Obviously, this is over now, so there's nothing to extract from this. But SUI, which is an upcoming layer 1, also built on Move, which in my opinion could potentially be even better than Aptos, and in fact I think is better than Aptos. Their potential airdrop could be coming soon, because we know they're giving away 20% to early contributors and 6% to the community access program and app testers. So it's likely that 6% of their total token supply is going to go towards an airdrop. Now, if you want to know how to get an airdrop for SUI, I've done posts on this in the past, but I think this is a pretty good up-to-date post, considering that they just launched the ability for you to run a node. So I think a few things that you can do is run a node, get involved with the NFTs, get a SUI domain name, request faucet, get a SUI wallet. All the steps are here. I think some of these steps could be worthwhile taking, and also join the SUI Discord. They did say that they weren't doing an airdrop, but when projects say this, it kind of even makes me think there's more of a chance they're getting an airdrop, because they obviously don't want to give it away. If they make it public, it kind of gets too saturated. So there may be an opportunity for SUI. It'll probably be smaller than Aptos, so it might not be up to 7,000 like Aptos, but you might make a few $100 off it, and that can be very worth it just for like a few hours of your time and some gas fees and minor things like that. Obviously, if you start running a node, you're going to pay a lot more, and if you start getting domain names, you might have to pay money for domain names. So how far you go and how much you spend depends on your conviction in how likely you think an airdrop is, but it definitely could be worth having a go. But back onto the Aptos, the ecosystem is developing quite quickly, and this is one of the reasons why a lot of people have been speculating on it. But we got to look at the metrics now, because although everything sounds good in theory, good tech, good ecosystem, big backers, the adoption that Aptos is getting is significantly lower than the price would suggest. So if we look through the ecosystem here, there are some okay dApps that have launched. I think, there are some decent dApps like 𝗕𝗆𝗙𝗀𝗏, you've got Liquid Stop, Ditto, Pancake Swap launch on Aptos as well. We're probably going to see like Curve and some of the bigger DeFi pillars start to launch on Aptos too. But if we do look at the total overview of all the chains, Aptos sits at rank 31 with a $57 million worth of TVL. That is behind so many chains. It's behind Moonbeam, which has got only a couple $100 million market cap. It's behind EOS. It's behind Canto. It's behind Rune. It's behind Waves. It's behind 𝗏𝗏𝗏. I mean, it's basically a nobody when it comes to TVL. So since the ecosystem is so new, the price is being driven by speculation and it's not being driven by users. Oftentimes, price does follow TVL. There's good evidence that price is actually a lagging indicator to TVL. But in this case, Aptos is not abiding by this. It's not abiding by TVL as a leading indicator because it's such a new ecosystem. It's abiding by retail speculation and hype and gambling on the price. Because if we look at the daily transactions, Aptos is doing like 24K a day, 19K a day, 15K a day, 12K a day, 15K a day. It's doing like decent numbers if we look at it objectively. But then if we factor into the price, I mean, you've got other blockchains like Polygon, Ethereum, Solana, Near, Avalanche. Sorry, this is the daily addresses chart, not the active transactions chart. I mean, they have so many more users. So Ethereum has 400K users a day. Solana has 400,000 users a day. Aptos has 20,000 users a day. Now, Solana, for example, it has the most active users of any crypto. But if we look at Solana's market cap, we can see that Solana has a fully diluted valuation of 13 billion. And as we previously affirmed, Aptos has a fully diluted valuation of 18 billion. So Aptos is basically 1.5 times higher value than Solana now, based on fully diluted, even though its market cap is less. And yes, I don't think that fully diluted is fully relevant. I kind of have the opinion that the market's irrational, and in many cases in the short term, it really abides by market cap more so than it does factoring in unlocks in many, many years. But it still is shocking to me that we have Aptos at 1.5 valued Solana, even though it's doing 15 times less volume in terms of transactions and daily active addresses. Now, on the transaction front, Solana's doing 15 to 20 mil, mostly off the back of its NFTs. Polygon doing 3 mil, Avalanche doing 1.7, even Near doing 460K a day, and then you've got Aptos doing around 100 to 150K a day. So it's clear that the price is not being driven by the underlying metrics, it's being driven by speculation. And that's okay, because markets don't operate, they always operate looking into the future. So every time, at any given moment, if you have a price for an asset, it's pricing in future growth, it's pricing in future adoption, because everything can be kind of valued based on either a discounted cash flow if it's revenue generating, or a more speculative model if it's a more risk-on asset. And I think in Aptos's case, the market price is factoring in future growth based on the potential of its tech, and not necessarily fundamentals based on current metrics like transactions and TVL compared to some of the other projects. So it becomes much harder to value Aptos than it does other projects, which makes it a lot harder to trade than other projects. Now, in terms of active core developers, we have seen some growth in this space. We've seen the active developers significantly increase. And in terms of on-chain metrics, I still think it's quite overvalued if we look at volume. So Phantom, for example, the cumulative volume is 1,113 times bigger than Aptos. Like 1,113 times bigger than Aptos. The Phantom TVL is 12 times bigger than Aptos. I'm just giving you an example. You can use any project to kind of do this. The volume is 10 times bigger than Aptos, but the valuation of Phantom is 3 times less, or 2.3 times less than Aptos, despite having 1,000 times more cumulative volume, 12 times more TVL, and 10 times more volume. And in terms of FDV, Aptos is roughly 12x higher value than Phantom. So that just kind of gives you an idea as to how speculative the Aptos price actually is. Now, one of the things I said at the start of the video was Aptos is kind of on a similar path to something like a Solana, because it's a new project that's just launched and has heavy VC backing, and these VCs want to pump the price. And if we kind of map Aptos's trajectory versus Solana's trajectory in the beginning, it's following basically the exact same pattern. And this is getting that early run-up, that massive parabolic wave with a couple pullbacks. And in Solana's case, it kept going and it kept pumping. And because of this, shorting Aptos in the short term becomes a very difficult trade. And I would say it's even becoming a crowded trade because a lot of people are starting to adopt the short mindset when it comes to Aptos. So if we take this chart as kind of a basis for how Aptos might play out, there's actually more upside. And shorting it right now becomes tricky and it becomes risky. So what should you do? Well, I've kind of developed quite a comprehensive plan, actually. I've been thinking about this for the last week because I did get into Aptos early and I bought some spot. And fundamentally, I do believe in Move. And fundamentally, I think I don't know whether they'll succeed because it's impossible to tell now whether they'll actually gain traction. But in theory, it's worth having exposure to the Aptos and SUI ecosystems. Now, I think SUI might be the better bet here, but it's impossible to know how SUI will launch. It could do a similar thing to Aptos and just run up. But, we don't really know what will happen. We don't know what market conditions they'll launch in. So I know that I want exposure to Move, but that doesn't necessarily mean I want exposure at these prices. So there's two real discussions here to break down my plan. There's the plan in the shorter term. So what I'm going to do in terms of trading this token, how I'm going to approach it in the short term. And then there's also the plan for long-term exposure, because I actually do want long-term spot exposure to Aptos. I think the fundamentals are strong enough to warrant long-term exposure, but you have to be aware that there is a lot of dilution coming. So it becomes a risky game because VCs, although the price will pump as they try and, manipulate prices, eventually they are going to need to take profits. And if you think they're not taking profits after they've made like a 20x on their initial investment or even more, 50 to 100x in some cases, you're wrong. They're definitely going to take profits as soon as their tokens unlock, because that's just how things work in crypto. VCs take profits and they want retail to be their exit liquidity. That's just how it works in this industry. So we kind of have to address the short-term plan and the long-term plan differently. So I'll answer part one first. What is my short-term plan? I think the price is overextended and I think it could definitely retrace, but it's a hard token to short for a multitude of reasons. The first reason why it's a hard token to short is because of what Solana did and because of what other new L1s have done, and that is continue to run. The second reason why it is hard to short is because of Bitcoin. Bitcoin is currently relatively bullish, and if we do get a breakout to the upside of this range, which could potentially, have 24 to 25k targets and even more bullishly 30k, but we need to see how things play out before we make those kind of assumptions, then it's hard to see Aptos necessarily having a major pullback against general market strength. So the market also makes Aptos a difficult one to short. And the other reason why it's difficult to short is because of the point I made before of the vast amount of VC investment. So there's just so much vested interest to pump this token that you're kind of going against some of the biggest players in crypto by shorting this token right now. But at the same time, I'm of the belief the market eventually comes to its senses, and I'm of the belief that overextended tokens eventually do come down to fair value. And if I think fair value is much lower, then there is an opportunity to short there. So I do have a plan, and that is to short Aptos once it confirms a higher low. I need to see momentum breaking down. This to me is not momentum breaking down. In fact, this is actually quite a bullish pattern that I definitely could have upside targets. So if anything, you're kind of more looking to long this in the short term, although I'm not going to do that because I just kind of want to stay away from this in terms of longing. It looks more like a long than it does a short if we just trade based on momentum, which makes shorting this very, very, very difficult. So my plan is to only short once it forms a top formation. Now, obviously, calling the top is very difficult, but once it starts to show weakness in terms of its aggressiveness to the upside, volume starts retracing, the RSI starts to top out on the higher time frames, it breaks below key EMAs on the daily, there's a few confluence points, I will look to short. And probably the main confluence point for this is making a lower high. So what this would mean is the token making a lower high. So maybe it pubs, it retraces, then it just can't get above, and then it rejects, and then it does this. And that's a lower high to me. And that's an indication that we're starting to see some weakness. And if it makes a lower high and the general market starts to pull back, then there's definitely potential for a short here. So I want to see on the 4-hourly and the daily a lower high. And if I see a lower high on the 4-hourly and the daily, so let's say it comes down and then it tries to push up, but it can't, and then it closes week on the daily and then starts to look like it's coming back to the downside, that is my level to short, and then I'll set my stop above the previous wick. The 4 hourly I'm also looking at quite heavily because I believe, it's a good time frame that I like to trade on. If we start to get some bearish momentum here where it just can't push up and it starts to die down, definitely could be looking at shorting, and maybe we even do that in confluence with the break of a horizontal. And that could be another short scenario. So we do want to see momentum breaking down here before we short. And that will also likely be in confluence of a Bitcoin breakdown. Because the problem is if Bitcoin pumps, it might just give altcoins extra steam. And because Aptos has been so prevalent in terms of being a top gainer in this market, along with some other altcoins, it's very hard to short this aggressively unless we think a general market retrace is coming. So the ideal scenario is Aptos prints a lower high whilst Bitcoin is breaking down, and then that gives us a much better confluence to actually enter an Aptos short. That's my short-term plan. And I will definitely, by the way, 100% be shorting Aptos at some point in the near future. 100%. I actually sold a lot of my spot bag that we bought months ago, as I showed you at the start of this video. In this show, it's $7. I think I even got some entries at $6. I've sold most of that. I still have a tiny bit I'm probably going to sell soon, because I just think, we're up. Why risk it? Why try and squeeze out that extra 20-30% when we can just take profits? And I will look to flip short at some point. But I'm not going to be doing it right now because I believe that's irresponsible for the reasons that I just talked about before. And I'm trying to be responsible, of course, as we should always try and implement risk management in crypto. But in terms of spot positioning, this is the answer to the second part of the question. Although I sold a lot of my original bag, I'll be looking to rebuild a long-term position around the $4 to $5 mark. Because as I said, I want exposure to move, and Aptos is a token in my long-term portfolio, or at least medium-term portfolio, maybe that's like with a 1-year time horizon, that I would not mind having exposure to. So I do want exposure to move. I definitely will be looking at getting exposure to SUI, hopefully through the airdrop. If I don't get an airdrop, I'll definitely look to add that to my portfolio when it launches, if it's at a decent price. So I want exposure, but the same thing goes for Aptos. I also would like exposure to this. But I don't want exposure at $17 long term because there's so much dilution to come to the token. As we can see, there's just massive, massive dilution. I'll actually show you the tokenomics. Go into the tokenomics tab and we go into the vesting schedule. If we scroll down here, we can see this is where we currently sit. So we're in February 23, just for all intents and purposes. We haven't even hit the major cliff in October, November. So we're going to hit a major, major cliff. And after this point, I think it becomes safer to buy once we hit around 500, which is a quarter of the total supply. But right now, only 160 have been released. So around the 500 mark, it becomes better because it kind of dies off in terms of the severity of the cliff. But the total supply at 1 billion makes it very, very hard to long right now and be comfortable long term. So it's not a token I'd hold long term at all. But it is a token maybe I'd hold long term after that original dilution at a much better price point. One of those price points is the $5 level. That's where we saw this initial breakout. So this is a level that I definitely one day have eyed for a spot buy. And then potentially even lower than that at the $2 to $3 level. We've got the 340 level there, which was that initial first wick down. And then, we also have the $6 level, which I think is probably okay, which was the first level that it wicked up to before it broke out. So those might be a few levels I'll kind of start DCAing around there. I do not mind the $5 level. I prefer the $3 to $4 level though, but I'm just kind of, keeping my eyes on it. And eventually at some point I'll look to load up on spot, but that might take a while. And that's likely going to be after October, after the dilution. But the thing you've got to remember in this market is 99% of the time, you're always going to get better prices. So don't feel the FOMO, and this is not just with Aptos, but it's with most tokens in this market. Don't feel the FOMO to need to buy now just because the market's pumped. If your time horizon is longer, especially if your time horizon's like, let's say 2 to 3 years, you're going to get better entries on a lot of these projects within the next year. I'm very confident in that, especially like a token like Aptos, which is overextended. So if your goal is to add things to your long-term portfolio, you're going to get way better opportunities to accumulate that aren't necessarily, riding a short-term wave of momentum and are overextended. And I would make the same argument for Bitcoin controversially. I'd make the argument that okay, yeah, we could push up. We could even go to 30K, sure. And we're going to make a lot of money trading that wave if that happens with the altcoins. But in terms of long-term buys, I'm not that interested in DCAing here. This isn't my DCA zone at all. Long-term. I'm talking like, 2-3 year holds. The time to DCA was November, December. And I was making buys during that period. Maybe didn't accumulate enough at the time, but it's very easy to say in hindsight. I'm happy with what I did get out of it. But now that we've pumped, this isn't the time to be DCAing. The time to be DCAing is into a red market, and the time to be selling is into a green market. So if anything, you should be taking profits now on long-term stuff. And although, yeah, we could pump to 30K, if that does happen, I will be playing the alt trading game to make profits, and I'll rotate that back into stablecoins. And eventually, when the market pulls back, I'll look to DCA into alts and crypto. So the exact same thing applies to Aptos. It's that, you got to be patient, because at some point you're going to get a much better entry. And although maybe you can't necessarily short trade that on leverage the whole way down, at some point you probably will get an opportunity to short, and at some point you'll get an opportunity to buy. It's all about patience. This market has a way of transferring money from the impatient to the patient. And you have to remember that. So that's basically it for Aptos. I'll talk about Bitcoin just quickly, because we are at a critical point right now. I think for Bitcoin, in the very short term, I'm going to talk very short term right now, because you kind of know the range for the long-term breakout. I'm actually going to go into the 30-minute chart. This is the key level for me. It's this level here. So we don't want to break into too far into the mid-range, because if we break too far into the mid-range, that's going to indicate a drop down to the bottom of this range, the 22.4 region. So I actually really don't want to see us breaking 22.7 in terms of maintaining bullish momentum. So this is the key level that I don't want to break. It's this 22.7 to 22.8 region. So we could definitely bounce off that. The reason why I'm saying this is because on the 1 hourly, that is a higher low. So we want to keep making higher lows in order to make our push up towards the top of the range here. But if we start breaking this level, then that is an indicator to me we're coming back down to the bottom of the range. And as you guys know, I've been longing and shorting this range. So every time it's gotten here, I've decided to take a long. And every time it gets here, I've been shorting. With the exception of the long I took at 23, but that was a short-term trade in the anticipation that we break up into this range, and then we either flip short or we just take profits. Because as you guys know, taking profits on a long is the exact same as shorting. It's just it's a sell trade. You're just not opening an active trade. You're closing a current position based on a sale. So this is still the range where I look to sell. This is still the range where I look to long. I am still in a long, as you guys know, on the Gains trading comp. Link in the description if you want to trade in the trading comp with me. That'll probably be a long that I look to close around this range, though, because it's kind of a very scalpy trade. And maybe it's one that I rushed into, but look, I don't really mind, because I only lose like $90 out of a 5K portfolio. If it loses, then we'll go again on another setup idea. But yeah, it's not the greatest time to be trading right now until we kind of confirm either we get into this range, then we could definitely look at doing some trades either on a breakout or a short of a rejection. Or if we break mid-range, as I said, which is a very critical point right now, we're probably going to come back down to 22.4. And then that gives us another opportunity to long, as long as we still kind of obey this structure here. But in terms of our longer time frame stuff, we're basically coiled up, and we're going to need a breakout to either side to make a decision here. To me, probability of a breakout to the upside is much higher. Whenever you have a bull flag like this, a breakout, and then consolidation, typically that does result in another breakout to the upside. I say typically because it's roughly 65% of the time, not all the time. So for me, likelihood of a breakout is still to the upside, and this is actually quite a bullish pattern. If we zoom out, things start to look bearish if you go on the 5-minute chart or something crazy like that, and you kind of see a breakdown. But like, let's just zoom out a little bit and not be too crazy with the time frames, and things are still looking pretty good from a Bitcoin perspective. And if you do want to trade, you can also do so on Apex, which is an exchange powered by L2. So it's powered by StarkX, which makes it very, very fast, and also has very, very low fees as well. And the trading experience here is actually amazing due to the low fees and the ease of depositing. So I recommend also trading on Apex if you're not taking part in the Gains comp. The reason I say that is because the Gains comp has a minimum trade of 7,500 position size, meaning that's a $325 position on 20x leverage, or a $750 position on 10x leverage, or sorry, $375 on 20x, $750 on 10x, or obviously 2x of $3,250. That's because of the way the exchange is built, on based on its oracles and also based on arbitrum fees. There is a minimum position size. So for those that are very small traders and don't have as much to trade with, because you are going to need a couple thousand to realistically trade on gTrade, then you can do so on Apex. And Apex, although they don't have a trading comp right now, they have trade to earn, which is a way that you can earn money by trading. And their trade to earn program is actually very cool. They're giving away $10 million over the next 52 weeks. Every single week, they give away $190,000 in banner rewards. And every time you trade, you come in here and you click claim on banner rewards. I opened one trade, a $50 trade, and I already have 1,166 banner rewards waiting in my estimated rewards. So the rewards are quite high, and you can claim this after every epoch. So I can claim this in 3 days and actually stake it in the banner pool under this swap managed liquidity section to earn more yield, or I could swap it for USDC and then use that to trade with. So Apex has trade to earn. If you're not in the game's trading comp, and there's also a link in the description to sign up for Apex to trade. So because if you're going to trade at the end of the day, you may as well make money for it. So if you do so in games, you can make money through the prize pool, which is quite big, $100,000, or with Apex, you can take advantage of the $190,000 a week in incentives. So my belief is that if you're going to trade, you may as well get something for it, which is why I like the DEXs right now, because of the huge incentives they're trying to get people trading on the platforms. And we may as well take advantage. If you're going to trade anyway on an exchange, we can actually earn something. So yeah, links in the description to Apex. If you are a smaller trader, if you're a bigger trader and you want to do, and you want to enter the comp, then join games. But I don't think you can go wrong with either. They're both different models. They both have different pairs. So yeah, I think there's something for everyone there. So yeah, let me know what you guys think of Aptos. I'll answer a couple questions now, just to kind of answer any questions you guys may have. Someone asked, when is the Glimmer, so the Moonbeam tokens, being unlocked? Moonbeam is actually super interesting because the DOT ecosystem as a whole has kind of been a massive lagger behind the market. And although we have seen breakouts from DOT, we haven't seen it move in any significant way. Moonbeam is actually pretty diluted. So their tokenomics aren't on CoinGecko. I can search them up, but it'll take a while. So just for the purpose of answering this question quickly, there's $1 billion supply, 556 currently circulating. I believe the vesting on those tokens from memory is quite steady. So there's not massive unlocks like there used to be. So I don't think unlocks are necessarily a reason to be too scared of investing in Moonbeam. It's not a reason that I'm scared. Although I'm not necessarily accumulating this now. At some point I will be though. It has had a run up. I'm more interested in 20 to 30 cents. So this was definitely one that was, I think, a decent buy in that zone. But for now, I'm kind of just, waiting and watching with a lot of these altcoins to see where the market goes next, mostly trading for upside. So if you think we're going to 30K, I don't think there's a point in investing for 2 years in a long-term spot buy when you can trade in the shorter term, take advantage of that upside, cash out, and then get better entries. That's kind of my plan. And if for some reason the market never comes back down again, some crazy reason, we just keep pumping into a new bull market, which I don't think is the case, but if that is the case, then hopefully you have enough spot to still be exposed to upside, and you can still trade that upside along the way to make profits so you don't get FOMO. So it's all about balancing how much you have in the market and out of the market at any given moment and any given time. Christopher agrees with me with Aptos. Yep, too late. Don't FOMO into spot. Although you guys know my plan now. You can watch that back if you want to know my plan. I had it written down for you guys in a nice little easy dot point form to kind of understand. If you want to screenshot this, you can screenshot it. And yeah, get it kind of locked in so you can follow the plan in future. Awesome, guys. I enjoyed the show today. I'll be live on Monday. Unless anything crazy happens over the weekend, then I'll cover it. I appreciate you guys watching the shows. Been great to be back and streaming live again. I'm also rolling out a new show format soon with some really cool, like, edited, shorter research pieces, which I think you'll like. So yeah, I'm excited to roll that out. And until then, I hope you have a lovely weekend. It's a bit earlier. It's a bit later in Australia. If you're in America, it's still Thursday. It's Friday afternoon here. So almost time to relax, but not quite. Still got a little more work to do. Hope you guys have a lovely day. I'll see you in the next one. Peace out.